Right now, there is a deduction sitting in the tax code that can legally erase taxes on 20% of everything you earn as a freelancer. It's called the QBI deduction, Section 199A, and according to the IRS, fewer than half of eligible self-employed filers claimed it in recent tax years. That's billions of dollars left on the table by people who did the work, filed the return, and still missed one of the biggest breaks the tax code has ever handed to solo workers. Here's why this matters even more in 2026. Section 109A is currently scheduled to expire after December 31st, 2025, unless Congress acts. As of this recording, legislative proposals are circulating to make it permanent, but nothing is signed yet. That means this could be the most valuable or the final year to use it. By the end of this video, you'll know exactly whether you qualify, how to calculate it, and the specific moves that squeeze the most out of it before the rules potentially change. What the QBI deduction actually is, the Tax Cuts and Jobs Act of 2017 created Section 190A. Congress wanted to give pass-through business owners, sole proprietors, S-corp owners, LLC owners, a tax break comparable to the corporate rate cut that C-corps got. So they wrote in a deduction equal to 20% of qualified business income for eligible filers. If you're a freelancer operating as a sole proprietor, a single-member LLC, or an S-corp, that's you. Here's what qualified business income means in plain terms. It's your net self-employment income, revenue minus legitimate business expenses, from a trade or business conducted in the United States. It does not include W-2 wages you earn from an employer, investment income, capital gains, interest, or dividends. It's strictly your freelance or gig net profit. So if you netted $80,000 from freelance work in 2026, the potential deduction is $16,000. That $16,000 is subtracted from your taxable income before the IRS applies your income tax rate. At a 22% marginal rate, that's $3,520 in actual tax savings. At 24%, it's $3,840. This is not a credit, it's a deduction, but it's a large one, and it's one you take whether you itemize or use the standard deduction. The deduction is capped at the lesser of 20% of your QBI, or 20% of your taxable income minus net capital gains. For most freelancers under the income thresholds, the first number is what controls. Keep that in mind, who qualifies and who gets phased out. Here's where most content online gets it wrong. They describe QBI as a small business deduction and stop there. But the qualification rules are income dependent and profession dependent, and they work differently for freelancers than for traditional business owners. In 2026, the IRS income thresholds for the QBI deduction are $197,300 for single filers and $394,600 for married filing jointly, adjusted for inflation from prior years. If your total taxable income, not just your freelance income, your total taxable income falls below those thresholds, you qualify for the full 20% deduction. No W-2 wage test, no complications. You take the deduction. Your filing status changes the math significantly here. A married freelancer with a working spouse could have combined income well above $197,300 and still face a phase-out. Run the numbers on your joint return, not just your Schedule C. If your taxable income exceeds those thresholds, the rules tighten, and that's where we're going next. But if you're under those thresholds, the move is simple. Calculate your net self-employment profit, multiply by 20%, deduct it on Schedule QBI, which is Form 8995. Done. According to the Tax Foundation, roughly 17 million self-employed Americans filed Schedule C in a recent tax year. The majority of solo freelancers and gig workers earn well below the $197,300 threshold. If that's you, you have no excuse not to claim this. The W-2 wage limitation and what it means for higher earners. If your taxable income is above the thresholds, the deduction doesn't disappear, it gets limited. And understanding the limitation is what separates freelancers who get the full deduction from those who get a fraction. Above the income thresholds, your QBI deduction is limited to the greater of two calculations. 50% of the W-2 wages your business paid, or 25% of W-2 wages plus 2.5% of the unadjusted basis of qualified property your business holds. Here's the problem for most freelancers. If you're a sole proprietor, you pay yourself no W-2 wages, zero. So under the first test, 50% of zero is zero. Under the second test, if you also don't hold significant depreciable business property, which most service-based freelancers don't, that number is also near zero. Your deduction could get wiped out entirely once you cross the income threshold. This is the single most common trap I see discussed in freelance tax communities. A copywriter earning $250,000 assumes the deduction scales up with income. It does not. It collapses if you don't have W-2 wages or qualifying property. The fix for some high-earning freelancers is electing S-Corp status. When you operate as an S-Corp and pay yourself a reasonable W-2 salary, those wages now satisfy the W-2 test. Let's walk through the numbers. Suppose you net $250,000 as a freelancer and your taxable income clears the threshold. You elect S-Corp, pay yourself a $90,000 W-2 salary, and pass the remaining $160,000 through as a distribution. Your QBI from the S-Corp is $160,000. The W-2 limitation is 50% of $90,000, which is $45,000. Your 20% QBI deduction on $160,000 would be $32,000. Since $32,000 is less than $45,000, you take the full $32,000. Without the S-Corp, you'd take zero. That's a $32,000 deduction. Real money. The S-Corp decision has setup and compliance costs, so it only pencils out above a certain income level, generally $60,000 to $80,000 in net profit, depending on your state. But for high-earning freelancers above the QBI threshold, this is worth running with a CPA. The SSTB trap, what most freelancers get wrong now, for the rule that trips up the most people in this audience specifically. The IRS calls certain professions specified service trades or businesses, SSTBs. If your work falls under that label and your income exceeds the thresholds, your QBI deduction phases out completely. The SSTB list includes health, law, accounting, actuarial science, performing arts, consulting, athletics, financial services, and brokerage services. It also includes any business where the principal asset is the reputation or skill of one or more of its employees or owners. That last clause is what catches freelancers off guard. Here's what most people get wrong. They read consulting and assume any advice-based work disqualifies them. That's not accurate. The IRS narrowly defines consulting in this context as providing advice and counsel. A freelance web developer is not a consultant under Section 109(a), even if they advise clients. A graphic designer is not in a specified service trade. A freelance writer is not in a specified service trade. A photographer is not, unless the primary asset being sold is their personal celebrity or brand name, which is a very high bar. Engineers, architects, and real estate agents are specifically excluded from the SSTB definition by statute. They qualify for the full deduction even at higher incomes, subject only to the W-2 wage limitation. If you're a freelance consultant, meaning your core deliverable is advice, strategy, or recommendations, and your income clears $197,300 as a single filer, your deduction phases out between $197,300 and $247,300. Above $247,300, it's gone. Below $197,300, SSTB status doesn't matter. You qualify regardless of profession. That's the line that matters most for this audience. My take, if you're close to the $197,300 threshold and you're in an SSTB profession, keep reading, because the next section is how you stay under it intentionally. How to legally maximize your QBI deduction. The deduction is most powerful when you actively manage your taxable income around the thresholds. Here are the specific moves that work. First, front-load deductible retirement contributions. Contributing to a solo 401k reduces your taxable income dollar for dollar. In 2026, The employee contribution limit is $23,500, and if you're 50 or older, the catch-up contribution brings that to $31,000. The employer side contribution, which you also fund as the self-employed person, can push total solo 401k contributions to $70,000 or $77,500 with catch-up. Every dollar you contribute reduces your taxable income, which can keep you inside the QBI threshold or reduce the phase-out bite if you're above it. Second, maximize Section 179 or bonus depreciation on business equipment. Purchasing and expensing business equipment in the current tax year reduces net profit directly, which reduces QBI, but it also reduces your taxable income, which is the number that controls the threshold. If you're just above the $197,300 line, a qualifying equipment purchase can drop you below it and unlock the full deduction. Third, time your income strategically. If you're close to the threshold in November and you've already optimized contributions, consider whether any invoices can be issued in January instead of December. Freelancers have more control over invoice timing than employees do. Use that control. Let me walk a second worked example end to end. A single freelance UX designer, not an SSTB, has $185,000 in gross revenue and $35,000 in business expenses, leaving $150,000 in net self-employment income. After the self-employment tax deduction of roughly $10,600, taxable income is approaching $139,400 before the standard deduction. Subtract the 2026 standard deduction of $15,000 and you're at $124,400 in taxable income. That's comfortably under the $197,300 threshold. The QBI deduction is 20% of $150,000, which is $30,000. Final taxable income, $94,400. At a blended effective rate, the savings versus not claiming QBI is material, pushing well past $5,000 in federal income tax avoided. That deduction was always there. Most designers in that scenario don't claim it because nobody told them they could. Now compare that to the same designer earning $210,000 in net profit, above the threshold. Without S-Corp election and without a W-2 wage strategy, the deduction may be limited or eliminated by the W-2 wage test, as we covered. The right move at $210,000 is to evaluate S-Corp status, maximize the solo 401k to bring taxable income closer to the threshold, and run the actual numbers. Not guess, calculate. One more thing I focus on for the freelancers I cover is the legislative picture. I focus on the financial side of freelance and gig work, and the 2026 sunset of Section 190A is the single most consequential pending tax event for this audience. The House-passed budget reconciliation bill in early 2025 included a provision to make QBI permanent. As of this recording, the Senate has not finalized the measure. If it passes, nothing changes. You keep the deduction. If it doesn't, QBI disappears after your 2025 tax year and your 2026 taxes go up automatically unless Congress acts. The right move is to claim the full deduction aggressively in 2026, plan as if it may not exist in 2027, and watch the legislation. Don't assume permanence. I'm not a licensed CPA or financial advisor. This is general education for freelancers, not personalized advice. If this video saved you money, or at least showed you where the money was, hit subscribe so you don't miss the next one. Drop a comment below with the specific tax or financial question you want me to dig into next. I read them all and build future videos around what this audience actually needs answered. Next week, we're covering the new tax law changes every freelancer needs to understand heading into 2026. There are provisions in the current reconciliation package that directly affect how you're taxed as a self-employed worker, and most coverage has been focused on employees, not us. That video goes up next week. If you're looking for tax software built for Schedule C filers, I'll put a link in the description. I only recommend tools I'd use myself. This video may contain affiliate links. I only recommend tools I use personally.